The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 3rd wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes. And folks, it is absolutely always a thrill for me to be here with you each and every morning. So thanks so much for joining me. I hope everyone had a terrific Tuesday out there. I know I did. Let's make sure that you and I, that we do everything we can to have an extraordinary and wonderful Wednesday. You know, for the next couple hours here, I'll do all that I can to share with you extraordinary tools that help us identify where price is headed to. That means we'll take a look at our A to B equals CD tool, because you can't catch lightning in a bottle. At least you can catch it on the stock chart out here. We'll take a look at our Fibonacci expansions and retracements, because the combination of those two, that's what create your Gartley and your butterfly patterns out there. Of course, we'll take a look at candlesticks. We'll take a look at the Japanese candlestick charting specifically, because the bulls and bears leave signs for you and I each and every day. We'll go count our peaks and troughs. We'll go take a look at our TAS market profiles. We'll identify support and resistance. Of course, we'll look at the Rhodes momentum trading indicators out there, because they help us to identify the emotion of the markets. When we really think about it, it's all about emotion. You know, emotion, it's really all about progress, right? And to make real progress, you and I, we only need to know three things. You should write these things down. Three things are all that we know. In fact, you should have these three things ingrained in your soul, and you should start your day each way. I just told you what my outcome was during the next couple hours. The key is, number one, in order to have really great emotion, you need to know what your outcome is. And number two, you got to have strong reasons why. I love doing this show. I love being here with you. I love the interaction that we have, whether it's interaction in the den or you give me a call at 877-927-6648 or email. However that interaction occurs, it's always wonderful out there. We need to have strong reasons why. We need to know our outcome. We need to know why we want that outcome. And then lastly, we've got to have a good action plan out there. And action plans, when we take a look at trading and investing, it's nothing more than take a look at the trade setup before you enter the trade. That's when you are most objective. Have a bracketed order. That means know what your stop is going to be. That means know what your stop is on both sides of the trade. Have a targeted exit. Have a stop in case the trade goes against you. And then just simply walk away from that trade. In fact, spend your time looking for the next trade that is out there. You know, one of my favorite stories about emotion out here, you've probably heard this story before. It's my story about Roger Bannister. Because, you see, it's really all about emotion. And the story about Roger Bannister, he's the guy who broke the 4-minute mile. And what is so amazing about that story is that for thousands of years, literally thousands of years, I'm not making this up, for thousands of years, people tried to break that 4-minute mile. Yet nobody could do it. In fact, the day that Roger Bannister was going to run the race, he wasn't feeling the greatest. He thought about, the wind was maybe coming against him. He thought about not doing it. But the bottom line was he did it. He broke the 4-minute mile. And then it only lasted for a few weeks out there. Because, you see, once somebody, for thousands of years, people tried to do this, right? What was it? Couldn't have been the water. Couldn't have been the wind. All of a sudden, when somebody saw Roger Bannister actually do it, then they knew that it could be done. And there was a lot of emotions. They had really strong reasons why they wanted to go ahead and break that 4-minute mile and join Roger Bannister out there. And they knew what actions they had to take place out there, folks. That is the story of leaders, and you're a leader out there, and we need more leaders in this world. So let's go run that 4-minute mile, because we know it can be done. In fact, let's do it together. All you have to do is give me a call at 877-927-6648 or internationally 727-445-1044. And you and I, we can go run that 4-minute mile together. This is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures. They're trading up 88 points out there. That's trading out at 17,141. S&P futures up about 9 points, trading out at 2008. NASDAQ up 4107. Well, maybe one day it'll be up 4,107 points. Right now, it's only up 16 points, trading out at 4107. Russell 2000 up strong as well, up 7 points, trading at 1184. King dollar back 125 ticks right now, down 12.5 cents, trade out at 82.88. Gold up $2, silver up a nickel. Light sweet crude up $1.20 after being down $3 or so yesterday. Quick peek across the globe out here. We're going to find that over in Europe, they're celebrating I'm not sure what they're celebrating, but you got the DAX up 1 4/10%. That's trading up 133 points. The FTSE up 55 points. You want to talk about a sea of green out here? How about that Hang Seng up 568 points last night? What kind of party were they throwing? I did not see that invitation out there. We'll go check in on that stock chart. The Hang Seng up 23 points. The Nikkei up 59. Let's go check in on the Hang Seng. Well, let me get my glasses on here. Wait a minute. 568 points. Whoosh. That's up 2.3% out here. Well, let's take a look at this stock chart, figure out what is the Hang Seng doing here. Let's go take a look at its larger A to B equals CD to the upside. Let's go see where that price projection is. That A point is going to be all the way back here, June 24, 2013. There's your A point. Your B point is out here on December the 2nd, 2013. Your C point, that retracement, back on March the 20th. It's got a little bit more room to go to the upside. Your 1-to-1 A to B equals CD. That little lightning bolt in a bottle will take you up to 25,822. That's its next stop, about another 500 points to the upside. Let me pull this back just a little bit further out here. Let me see. And the Hang Seng's making that high and making that move with less relative strength out there. Why did that A to B equals CD pattern go away? I don't know the answer to that. That also is likely going to make a larger butterfly pattern, too. Let's go put that out here. Let me put the expansions. Let's go see if we've got an A to B equals CD. That's hitting an expansion as well. Most likely is. That expansion I'm looking at, and then we'll draw that back in out here. That expansion is of some swing points from the trading session in February of 2013 down to that June 24th area. That's already at the 1.272, so it must be making a 1.618. So your 1.618 butterfly on this is a 26,737. That's a little bit above the A to B equals CD. Let me go to try to draw that back in here. It's about like that, and like this or so. Must have deleted it. So actually, well, yeah, so pretty good chance that what the Hang Seng is doing is trying to make its way up in between 25,857, 26,737, somewhere in that range out there. Again, it's doing it with less relative strength out here. You need one heck of a big reversal signal tomorrow. That would take place. I don't see that taking place. In fact, let's go take a look here at the DAX. Let's go see what the DAX is doing, up 139 points as we speak right now. So let's take a look at good old DAXy out here. This is a daily chart that we're looking at. Let's go take a look at its retracement. Now, the DAX here, nowhere near as strong as our markets. What I mean by that is the retracement off of that low that was put in on August the 8th. The DAX only made a 0.618 retracement. It's trading just slightly above it. So the DAX is a weaker indice. Of course, Europe is a bit weaker out here because I suppose the sanctions are having a little bit more impact on their economy. The sanctions I'm referring to, the Russian sanctions versus our economy. Now, speaking of Europe out here, we've got our man Lou from Nashua who wants to speak about the EUO. I'm supposing that's the euro. Lou, thanks for calling. Thanks for holding. How you doing this morning?
Very good. How are you?
Excellent. Thanks for asking. Was it the euro that you wanted to look at? Are you still in that trade?
Right. No, I pulled out, unfortunately.
Well, not necessarily. You made money, right?
Yeah, I did.
Okay, good. Okay. So now what would you like to do?
Wondering where to short again.
Where to short it again. Okay. So this euro is majorly stretched out here. Let me, I'm going to switch over to now I know you're trading the futures contract, right? So you're trading the 6E out here, but let me go take a look at the actual currency pair. If you give me a moment, I'm going to flip back and forth between a couple of screens out here. The euro, to me, and we took a look at this yesterday, it looks like what this wants to do out here, Lou, is it wants to possibly, and I do mean possibly make its way down to about the 1.3019-ish area out here. But you've got to, the key is, today's candle, let me refresh my screen, make sure that this is right out here. Because if it is, I'm just trying to evaluate the candle signal out here. You don't have a reversal. So if you're still gonna trade the euro to the short side, then what I'm gonna do is I'm gonna come right back here and I'm gonna say your trade on the euro to the short side is somewhere right around 1.3174. All right. And that's going to be the old market profile support level. And if it hits that target, that would be your short. However, what you'd have to expect is the point of control, the largest area of concentration of trades, right around the 1.321 level. So your trade to go short, right around 1.317. Would be the spot to take a look at a short trade. What you do not want to see this do, if you're watching us on Tiger TV, and this is the daily chart that we're looking at, you most certainly do not want to see the euro, if you're on the short side, get above 1.3238 out there. Because if it does do that, then it tells us that there's a change in trend that is taking place. Now, we don't know if that change in trend is nothing more than just a retracement or anything else. The other thing I would maybe caution you on the euro, Lou, is when's Mario Draghi coming out to speak? Is that today or tomorrow?
I'm not sure.
You might want to check on that. I think because he's likely going to move the currency. I think it might be tomorrow out there, Lou. I hope that all that helps you out.
Yeah, that's great. Thank you again.
You betcha. That was Lou and Nash. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Moving in the pre-market out here, we've got the Infinity Pharmaceuticals. Looks like, let's see, what's the deal out here? Let's see, announced global strategic collaboration to develop and commercialize something out here. Hey, look, it closed at $10.92. It's trading up at $15 right now. $15 is going to take out its most recent swing point. In fact, it's got a high volume high out here, so that's where it's targeted. How about that? You can go back to the trading session on February 25th, 2014 out here. A volume to the upside was 2.1 million shares. The high on that candle was 1670, so it's going to get back there in a very quick order. That is ticker symbol INFI. Tesla's up again today. It closed at 284. Right now, trading out at 287. GoPro closed at 53.95. 53.94. It's trading out at $56 this morning. So some of these momentum stocks really on the move out here. You've got Delta Airlines, DAL is a ticker symbol. It closed out at $40.93. It's trading down at $39 out here. I don't see the... were they out with numbers? I don't see the numbers on it. That pullback, 39.30, doesn't look to be anything too harmful inside of Delta Airlines. Ellington Financial, EFC, is the ticker symbol out here. Boy, they gapped down a couple of days ago with some pretty decent volume. It's trading a bit lower this morning, trading out at $23.60, about another $1 to the downside. Where's this thing going to trade into? 23.60 out here. Well, its last swing point is right there at about the 23.55 area. That's back on July the 9th out here. If it breaks through there, then this thing will should come all the way back to its April 7th area, which is right around the $22.60 mark out here. Yeah, let's go take a look at the futures market. You got the Dow futures up 85. Let's go start there and take a look at the Dow futures, see where they are likely headed to. Let's go clean up the chart out here so we can start from scratch. Now, the red diagonal lines out here on my screen, it's a price channel. I'm just trying to see how far does that take us back. So that's a price channel going back into the October 2013 time frame. So there's your red diagonal lines on my screen out here. That's what that looks like. Let's go take a look. So where Dow futures are, interestingly enough, just now making its way above that July 17th swing point high. Looks like that's the swing point, 17,085. Yeah, 17,085 is the number. So you're now well above that, 17,137. The Dow is breaking it out. If we take a look at its Fibonacci expansion numbers, so if we go from that swing point high down to the low on August the 8th, what you'll see is a price projection of 17,323. And at 17,323, you start to get into the top of that rising price channel that has acted for the most part as a resistance area. Not always, but that's your best level of potential resistance. So a breakout today above. I'll go ahead and delete that off my. Well, I won't delete it. A breakout today above. I'm just trying to see if I can figure out the market profile. It's probably right around 17,130 or so. Above a break above that, and you're likely to see a move to 17,323 in the Dow. So what does that do for the other guys out here? Let's go take a look at the Russell 2000. Let's go see what it is doing. Right now today, having made its 0.786 retracement, 1182.87 is the number. So far it's hit 1182.20. We had a caller yesterday who was long the IWM. He was asking, hey, where would this likely head to out here? Let me go ahead and get rid of that descending price channel out here just so we have less clutter on my screen. And I gave him very specific instructions. And those specific instructions were don't back out of the trade unless you see the VIX index close above the 50-day exponential moving average. All that took place yesterday was a test of that area. In fact, a test above that area, but a rejection. And we saw price. We now see that prices are moving higher. Pay attention to that VIX index here. What I also mentioned to him was that next likely target was that 0.786 area on the IWM. Well, the futures contract has hit that area. And what that says to me is that we ought to see in fact, it's actually tagged its swing point. It has it the low of the swing point is July 1st. That's at 1184. So it has an 1184.10. We've seen 1182.20 out here. So what that says to me, and just correlating this back to the IWM, we're likely to go ahead and see the highs be hit inside the IWM. And here, in my opinion, is where the real message of the market's going to come from. It will come from the Russell 2000, not from the standpoint that the Russell 2000 will necessarily lead. However, when the growth stocks inside the Russell 2000 are in number one position, they are leading the way out here. What that tells us is the rest of the market is extremely bullish. So we get back. Let's go see how this market's going to pop. But I will tell you Stevie's logic behind why we want to pay attention to the Russell 2000. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 67 points, trading out at 17.1. S&P up 6, trade at 2009. NASDAQ Composite up 10 points, trading at 4608. Russell up 4 points, trading at 1183. NDX 100 up 6 points. New York Stock Exchange up 54. Gold up $1.70. Silver up 3 pennies. Light sweet crude up $1.26. Leading the charge to the upside, dollar-wise, is Netflix up $8, up 1 6/10%. Concours Technology. CNQR is the ticker symbol, up 5%, up $5 and change. Baidu up 4. Bit Auto Holdings up $5, up 6%. Infinity Pharmaceuticals up 36% out there. Well, we took a look at that earlier. That's up $4. You've got Mobile Eye up to $3. That's up 7%. To the downside, Digital Ally, DGLY, is the ticker symbol now. It's down 12% off $4, but this thing has had such a strong move out there. The candle-wise has no meaning as we speak right now. Clovis Oncology, different story there. It's off $3, down about 6% out here. Clovis Oncology probably going to come back into this little sign of strength out here. It might actually be a little bit of a buy if we take a quick peek at it. Maybe not, now that we pull this back out here. Pretty significant downtrend that this thing has been in. It did have a sign of strength off of the bottom, so you like to see that. That sign of strength, let me just pull this chart back a bit here. That took place on the trading session of August the 8th, as our market did as well. Had 1.3 million shares to the upside. And then since then, its biggest volume day looks like about 1.1 million shares on August 26th. Today, pulling back with 120,000 in the first 6 minutes of trading. We'll have to see how this pulls back. This may come all the way back to its original breakout, its original sign of strength out here. If it can do that, which would mean get down to about the $36 level, 35.79. Do that on light volume and test it. You know, it may be worth a trade, but this looks pretty nasty. Looks really, well, let me pull this back further. I take that back. This is interesting. Now that I pulled the chart back a little bit further, let me go ahead and remove some of the tools out here just so we can take another peek at it. Ticker symbol here is CLVS. Let me get that right for you here. Let me go ahead and get rid of the volume as well. So if we take a look at Clovis Oncology, you can see this thing really broke out. No idea what was behind the breakout. Don't really care what was behind the breakout. But if we take a look at it, the breakout, do I have to show the volume out here? Yeah, I need to put this back on. So wide price spread, accelerated volume, big time on the trading session of June the 3rd, 3.2 million shares to the upside. So this thing has actually come back to that original breakout area, and it did it with, where's that volume? 5.4 million shares. That's really a bummer. It's gonna struggle. You'd like to see this thing come back and test this bottom area again here, but it may be worth the trade for those of you that are looking at CLVS, Clovis Oncology out there. Now, I want to go back and take a look at the Russell 2000, because I really think that this is truly, you got two real keys in the marketplace, in my opinion. You've got the NASDAQ, which is the strong dog out here, and if the market's going to continue its move higher, and that's so far the signal out here. Hey, look, anything can happen in the next minute at 9:39, but we just have to go with the information that we've got right now. what I really believe is the real key for what the market's true next move is will come from the Russell 2000. I touched base on this yesterday. I'm going to touch base on it again today, and probably will until I see otherwise, I suppose, right? But what we've got here inside the Russell 2000, and the reason I say that is because when we pull up some of the longer-term charts, you'll really get a feel for the flavor behind that. In fact, let me just start off with that. Let me just here's the monthly chart here for the Russell 2000. So we take a look at this is the actual Russell 2000 futures contract here. So I got the continuous contract. And what I'm going to show you out here is that you've got one of the top picking or bottom picking patterns, this case here, because it was a top. You've got where price moved higher, did it on less relative strength, gave us a reversal candle, the whole 9 yards. That was on the trading session the month of July out here. So the month of July, big bear sash candle. No follow-through, by the way, in the month of August, as you know. But it's still a warning sign out here. Number one, if you move above that high, that's a bear sash candle, by the way. The top of that is the 12-10-70 area. It'll be very bearish. The chart itself on a monthly basis, if you look at this right now, if you're watching us on Tiger TV, it's got the Rhodes Momentum Trading signals on here. You see this light blue area, super strong. It doesn't, when I measure the markets here, at least the bull markets, you get buy modes once you get into this navy blue area. Cautionary area, when you see the yellow light comes on, that does not mean to exit the trade, just says caution, Will Robinson. And then you get to that light blue, and there's nothing but big blue skies out here. And that's what's still in place on the longer-term chart for the Russell 2000. So we know we want to watch the monthly high from July out there. Now, if that monthly high gets taken out, then that monthly high is going to take out this consolidation level. So any close above, we'll call it the trading session from July 1st out there, 1184.10. Then you're going to have what is the equivalent of about 130 point consolidation measured move breakout. If you add 130 to the 1203 in the futures contract, you're at the 1333 level. The monthly chart for the Russell 2000. Let me put that up on my screen here. Let me go grab that. I just have to switch workspaces out here, index, monthly, weekly. So we're going to do that, and I'll put that up on my screen for you. And you're taking a look at some of the charts. Well, the charts, many of these are charts that are included in my daily newsletter in the expanded version, so people have a real good understanding as to what's going on so they can manage their longer-term funds out here. If we take here's the monthly chart. The monthly chart for the Russell 2000. You had a 17-year consolidation pattern that it broke out of. It broke out of that in 17 years. I'm going back. Let me get my cursor out here. This is back into the 1995, 1996 area. So you have the Russell 2000 broke out of that area. It gives us a measured move price projection of 1350 out here. And that's where I think that the whole piece of, is the market going to move lower? Is the market going to move higher? If it's going to move higher, if the S&P is going to finish off the 2350, the NDX 100 is going to go run up and tag the all-time swing point high out there. It's really all comes from the Russell 2000. In my opinion, it's going to happen. I just don't know when it's going to happen. But when we see a break of the daily chart on the consolidation, it's a pretty good indication that that momentum move to the upside would be in place. And when I showed the NDX monthly chart yesterday, here's what the monthly chart for the NDX looks like. And that shows us that as long as the NDX stays above 4,049.98, that's its swing point high all the way back in, I believe it was March of 2000. Is that, March of 2000 out there. Once you get inside the swing point, logic says you want to go test the high of that swing point. So unless we see a rejection, and yes, this is a monthly chart, we're just beginning September. Look, September, just like seasonally, August and September, when you have a when you have a second-term president out here, well, that's a stretch. And I say that because you're supposed to be a leader. I happen to be up at 5 o'clock this morning. I get up early. I've always gotten up early. The early bird catches the worm, and it's nice and quiet. I can do my work, and I just happen to turn on the TV, and lo and behold, they have the conference, the press conference with the president or premier. I think they call him the premier in Estonia, and our president out there. And nothing could have gotten me more upset than to listen to that. In any event, this is not a political show out here, and I'm not it's just that the It's just that I got tired of hearing the dang words fair share. You know, we got people that are killing our citizens and attacking. And look, folks, if you know, when I'm here doing this show with you or what have you, can you imagine if I showed up to work and did only my fair share to show you and share with you what was going on out here? Here's the deal in life. If you do something, if you achieve a high level out there, what kind of results do you usually get? You know, if you say, I'm going to be great at something, you're going to typically get what? Good results. Can you imagine when you're trying to do something that's called fair? What kind of results you're going to get? Yeah, you're going to get the kind of results that we've got right now. Anyway, I was ready to, in any event, let's come back here to the NDX 100 out here. And inside, because we need leaders. You know, that's what you are. That's what I am. We are leaders out here, and it's difficult. It's difficult to. I should have slept in. I should have turned on, you know, I don't know, the Big Bang Theory out there, something to make me laugh. In any event, if we take a look here at the NDX 100, as long as it trades inside this, as long as we trade inside this swing point out here, chances are we're going to go see the high. But I really believe that if we just come back to it and we just take a look at the markets out here, I really believe that where that next real message comes from for us is back to the Russell 2000. Now, what we might see, you know, the other option is we might see the Russell 2000 get up to this 1203 area and then begin to do some type of retracement out here. But this pattern here has been in place for 10 months. This goes back to February 5th, really, if you take a look at it. So we've got a long-term consolidation. You know, the longer that thing is coiled, it's kind of like me, all right? I got coiled up here. I got, you know, yesterday was kind of, you know, putting me over the edge out there with regard to, you know, killing another citizen out there, and it is just simply time where you just know your outcome, right? I talked this morning about really three things out here in life. You need to know your outcome. They got to be clear, and if your outcome is to be fair when our citizens are being murdered out there, you know, then step aside and let somebody else take charge, for God's sakes, out there. In any event, probably upsetting some of my clients out here, but you know, it's so be it. Anyway, let's go take a look at some things that are moving in the markets. This is not a political statement, folks. This is about doing the right thing. That's what it's all about. It's about doing the right thing. And what's being done right now is not the right thing. Okay, so let's go take a look at Netflix out here. NFLX, the ticker symbol up $9. Let's try to get a feel for where Netflix might be headed to out here. And so you got Netflix taking out a B point. Let's go see if it's done it with volume out here. That's the trading session from July 2nd, 2.4 million shares out there. And we saw price get above that with 1.9 million shares. Not too bad, 1.4. So it's above the swing point with light volume out here. You know, that would set up one huge A to B equals CD to the upside if it could take that out. Right now, what's likely to occur here is just simply an expansion, move of an expansion of swing points. So we're likely to see Netflix make its way up to the 1.272 area. That's at the 493 area. You know, so it's at 486. So that's logical. Look, if it gets above that, if it starts to get some momentum, then you got 515 in store. That would be your 1.618 expansion of its set of swing points I'm looking at, which is July 2nd's high down to the low that came in on August the 1st out here. And that's what's going on inside of Netflix. Concord Technologies, that's up about $7. So I want to go back and take a look. I want to take a look at gold. I want to share with you I want to do more than my fair share. I want to go ahead and show you the chart of gold for us to take a look at. But let's first take a look at Concord Technologies out here. Gapping up this morning, volume behind the move out here, 432,000 shares. Now, if this thing ever does fall out of bed, it's got this hammer candle low that was formed out here on the trading session of April the 30th. And that low has not been tested. It did what it was supposed to do from a hammer candle. I teach clients of mine. I've got 30 hours worth of archived education, really great education. So if you're looking to test drive a newsletter service, come on over. Go click on my name on the homepage of TFNN.com. Try Mastering Probability, and then go into the 30 hours worth of archived education. I teach you how to trade a hammer candle out here. This is a daily chart. 1, 2, 3, 4, 5, 6. Yeah, and this fit the criteria like to the T. You got to love that. And since then it has moved higher. So that's the support area is going to be that low with high volume medium low. So if this ever does fall out of bed, expect this to get down into the $74 area. But right now, this thing has been moving to the upside. If we take a look at retracements on this off its last set of swing points out here, well, let's just come from the swing point high volume high, by the way, that looks like it has sort of been tested, but I don't think the actual swing point actually got tested out here. So you can see Concours headed up to that high of 130.39. You're at 108 right now and change, and it is at the gapped up into the 0.618 retracement level. Usually there's a lot of energy expended when you do that. Doesn't mean the move has ended, but you can expect it probably to move sideways, maybe even pull back and fill the gap that it created here this morning. 109.01 looks like the exact 0.618 retracement level, and it's gotten up to 108.91 out there as well. Now, I'm going to come back and take a look at Goldilocks. Now, I'm going to put the continuous contract up on my screen out here. We can go take a look at the the current contract. But right now what I want to show you, as we take a look at gold, let me pull this back out here. How did I do that? There we go. Oh, that's strange. What the heck happened here? Oh, there we go. Okay, I just have to pull it back. What I'm doing is I'm just trying to bring this back here. You got to squeeze it. Okay, there we go. Now I'm going to come all the way back. If you're watching us on Tiger TV, how about that for a critical pause? We're going into break. When we do come back from this break, we're going to go take a look at gold and the trend line that goes back in 2012. Because we did have gold break that trend. It's traded right back down into that trend line again. So when we get back, we'll go take a look at it. 877-927-664. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Let's go back now and I want to take a look at that gold chart. Now, this is a continuous contract I've got up on my screen. It's a daily chart. We could have done the same thing with a weekly chart as well. And if we're taking a look at from the upper left to the lower right, you'll see a yellow diagonal line out there. And I'm just using that as the trend line. That's coming off of the highs at the 1797 level. That was October the 4th, 2012. And then as I'm using my next trend line, my next touch point is the March 17th, 2014 level. Now, I'm going to go ahead and explode it out here. And what we can see here, so let me get this back to just kind of a normal format out here. You can see that what happens when you break a trend, not you, but price breaks a trend out here, whether it's a horizontal trend and using, for example, the TAS professional market profiles of support, resistance, unfair high, unfair low. Out here, great things. You know what? When you break a trend, either to the upside or the downside, you like to see price come back, test it, reject it, and then say, okay, I don't want any more. I don't want any part of that party anymore. I'm off doing my own thing out here, which is what we've got to do. Okay, I'm not going to get there. In any event, so what we saw here is gold broke that trend. It's come back now, and it's tested it on 3. This is now the 4th occasion out here. Is now the time to step in on gold? Well, I say not so fast out here. Now, the reason that I say that, now just let me visually show this to you. Yesterday was a wide-ranging bar. Wide-ranging bar, much larger, and this is after, we had gold was relatively contained, a lot of small-bodied candles as of late out here, but not yesterday. Wide-ranging bar. Markets don't end on wide-ranging bar. What do I mean by that? Typically, you don't see a reversal right away. In fact, typically, you'll see either higher or lower price. In this case here, lower price. If you take a look at other wide-ranging bars, here's one back on July the 14th. You saw a little bit of a move lower, in fact, into the bottom of that trend line on the very next trading session out here. You come back to this wide-ranging bar on May 27th out here. We saw price move lower for another 6-7 days out here. Here's a wide-ranging bar to the downside on April 15th, lower prices. It works the same way as wide-ranging bars to the upside, right? Here's a wide-ranging bar, breakout move, June 19th. It's where gold, in essence, is pulling back into, right? So it's pulling back into a breakout area. Let gold just kind of relax here for a couple of days. Do something different. Maybe give us a reversal signal of some sort out here. But wide-ranging bars, markets don't end on wide-ranging bars. You'll typically see either a continuation of that move or perhaps it's an exhaustion. Maybe all of the stops were taken out yesterday. I suppose that's possible. Look, what we know is that the smart money, or presumed to be smart money, the commercial traders, I don't know why I call them large, the commercial traders out there, the real big boats, we know they have been net short gold. In fact, but they started easing off of that net short position last Tuesday. So I think the CFTC data, even with it being a holiday, it's still off this Friday. I'd have to look at the schedule. It's either this Friday, perhaps it's Monday, but I think it's this Friday. We'll see we'll see if, as of the close yesterday, I'm imagining that the commercials took some of those net short positions off the table as well. The real measure comes down to what is it that they exactly took off. In any event, I just thought I would share with you by doing more than my fair share what gold is doing. Now, what's interesting here is we talked about the Russell 2000 as being one of the components to help us understand a breakout. The second component is the NASDAQ out here. And I see the NASDAQ has given back its gains as we speak. So when we go into the next hour, let's go spend time and take a look at the NASDAQ out here, because it's also from the NASDAQ where we should get our next clue out here. So, folks, it is Wonderful Wednesday. Hey, thanks so much for joining us. If you're off to start your day, have a great day. I look forward to seeing you tomorrow morning or maybe in just a few. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.